Hello, everyone. Maybe we'll give it a minute here before we start here, but welcome to the December Arca Crypto Market Call. Joined as always by Nick Hotz from the Arca team. Good morning, Nick.
Morning, Jeff. How you doing?
Great. Okay, that's enough time. People can catch up. For those who are new to this call, this is a new series Arca has been doing for a couple months now, talking about the digital asset markets, trying to do it every month. Quick history lesson for those who are new to the call here. I worked at Lehman Brothers in the early 2000s, back before Lehman was a dirty word. It actually was a prestigious firm at one point. And at the time, again, this is early 2000s, the internet was somewhat new. Data extraction was still difficult. Lots of people didn't really know how to do it. But the fixed income team at Lehman Brothers, run by Rick Reeder, who is now the CIO of BlackRock, but at the time he was the head of fixed income at Lehman, he did a weekly Tuesday morning call to talk about the credit markets, filled with tons of charts from Bloomberg and other areas of the internet, with the help of his staff. Shout out to Arthur Tedeschi and Krishna Hedge and others who worked on that call. I found it to be tremendous. This is actually before video calls. The presentation was actually emailed out to people ahead of time. I didn't know till a decade later just how impactful this call was. Not only was it helpful for me as a young analyst there, but almost everybody in fixed income listened to this call and got a lot out of it. You fast forward to today, and I think the digital asset market is in a similar place to fixed income in the early 2000s, in that it's changing a lot, right? Fixed income in the 1980s was pretty boring. Then you had the high yield boom in the late 80s and ultimately credit funds in the 90s. I think crypto's in the same boat here, right? It's expanding, it's evolving. There's a ton of data that most people don't know how to extract. But the difference is now I think market participants in this space are actually ready and savvy enough to understand some of the nuances versus maybe 3 to 5 years ago when investing in digital assets was really kind of a leap of faith. So we hope these monthly calls are informative. We'd love to hear feedback if there's certain areas that we aren't hitting on that you want to see. But we think this is more meant for people who understand the markets and are trying to get a little more nuanced into what's going on. So, next slide here, quick disclaimer, as always, this commentary is provided as general information only, and it is in no way intended as investment advice, investment research, a research report, or a recommendation. You can read the rest here. But again, this is going to be just overall what is happening in the digital asset market. So again, I'm Jeff Dorman, Chief Investment Officer at Arca, joined by Nick Hotz. Hopefully you guys know him by now, one of the best research analysts here at Arca, does a lot of work on both macro as well as individual nuances in the digital asset market specific to layer ones, layer twos, AI, and some other areas. So Nick, let's get started here. Let's talk about what's happening here. Going to the first slide here, we'll start a little bit on the macro. For those who have been listening to us for a while, we don't believe macro is really a huge driver of what's happening in digital assets right now. We think 2022 was the anomaly. And if you look more at longer term correlations, the near zero correlation to other asset classes, including equities and rates, is probably more accurate. But that being said, liquidity is definitely on the rise here, right, Nick? I mean, this is a chart going back almost 2.5 years here. Which is global liquidity in any way you look at it is good for risk assets, right?
Yeah, and what I'm doing here is just using a market-based indicator. So I'm just using gold, the NASDAQ stocks, and the US dollar here just to kind of give a proxy for that. And, I agree with you, Jeff, that in a lot of cases there isn't too much correlation, but certainly for Bitcoin, and definitely at times like this, liquidity is playing a big role in my view here. So you can see that that's definitely been moving upwards, and that's kind of been confirmed by the Fed as of yesterday with their pivot.
Yeah, certainly, if not fully explicit, certainly implicit pivot yesterday by the Fed. I think it's pretty clear that the rate hikes are done for right now, and I think the market was right to get ahead of that and starting to price in rate cuts for next year. So on the margin, definitely positive for all our risk assets. We'll see here in a minute, probably not driving everything that's happening in the crypto markets, but certainly a nice backdrop. But moving on to the next slide here, here's why I do think this is important. This is the bull bear sentiment related to equity market. And you can see here on the right, what we saw between October and November. And recall, digital assets did great in October, one of the best months of the year for digital assets, but the equity market and the fixed income market did not do well, right? At the time, we were talking about, pretty important that digital assets were able to rise when nothing else was. You fast forward a month later, and over the course of November and now into December, huge reversal in terms of sentiment. We went from one of the most bearish indicators on record to one of the most bullish indicators on record, one of the biggest swings from bearish to bullish in the last 20 years. And I think this is, you know, pretty important for a few reasons, right? One is that it does appear that digital assets may be acting as a leading indicator. And we'll get into that again in a moment here. But more importantly, this was across pretty much every risk asset. There was a huge reversal. And again, probably front running what the Fed said yesterday, right? But, pretty much acknowledging that we're not having a recession, certainly not this year, maybe not even in the next year. Soft landing probably in play. And if you go to the next slide here, why this matters across digital assets is this led to a ton of inflows. Now, there's other nuances. This is just showing, shout out to CoinShares who produces this data every week. This shows the inflows into all types of digital asset products. A lot of it is Bitcoin, but there are other products as well, Ethereum mostly. But you can see over the last 11 weeks here, $1.7 billion in inflows across the digital asset space. Again, some nuance here. This is obviously related to the upcoming Bitcoin ETF approvals as well, but also just indicative of the sentiment shift. And again, digital assets really led this before the equity markets and the credit markets got involved as well. But if you look at the next slide, this is why I think all this comes together pretty importantly for digital assets. Is when you have why are we having these inflows, right? Why is new money entering the system into digital assets, right? Again, part of it certainly because of Bitcoin and the ETF application, but I think there's another reason for it. And this chart here is really interesting. This is the rolling 2-year correlation between the S&P 500 and the Bloomberg U.S. Aggregated Bond Index. As you can see here, over the last, we're basically at the highs of the last 45 years here. And this is why this is important, right? You've probably heard about the 60-40 portfolio, right? A typical modern portfolio over the last 30, 40 years for especially financial advisors and RIAs advising their high net worth and retail clients. 60% equities, 40% fixed income. Why was that such an important ratio? Because in general, all right, when bonds go up, stocks go down and vice versa, right? From 1982 up until basically 2022, interest rates were going straight down and stocks were going straight up for the most part. Well, 2022, we didn't see that, right? We saw bonds get crushed because interest rates rose and we saw equities get crushed. And what happens in 2023? It's the opposite. How bonds are doing well and stocks are doing well. So when you have a real high correlation between bonds and stocks, while that's great this year for everyone's portfolio, it's not the purpose of the 60-40 portfolio. It doesn't offer that diversification. And as we talked about, because digital assets are not correlated on any long-term basis to any other digital asset, I think you're starting to see a real shift in the idea of maybe digital assets, including Bitcoin, but not exclusive to Bitcoin, needs to be a part of that portfolio, right? I don't think anyone's explicitly called it yet like the 55, 35, 10 portfolio, but it's happening, right? Guys like BlackRock. Sorry?
You just coined it.
I just coined it. There you go. The 55, 35, 10 portfolio. I think that's happening. I think you're starting to see like BlackRock came out and said, back in April before they even did their Bitcoin application, that they think that there's room for Bitcoin specifically in a modern portfolio. We've seen others come out as well. Obviously, Fidelity, Arc, already on that bandwagon. I don't know what the ratio is going to be. I don't know if it will be 55, 35, 10, or it'll be something else, but it's pretty clear that you need diversification in a portfolio and you're not getting it from bonds and stocks right now. And I think that you will continue to see inflows into the space because of that. Moving on, this is a little harder to see here on this chart here, but, we talked about crypto leading, being a leading indicator. We definitely saw it between the last 2-3 weeks of October. You saw digital assets rise, nothing moving in the equity or credit world, and then obviously into November, into December, you saw that sort of lagging effect to the equity market. We've seen this before, though, Nick, right? I mean, this is not the last time, or this is not the first time that crypto has really been a leading indicator for other risk assets, right?
Yeah, it's not. And I keep, every single time it happens, I keep not believing it. And I'm saying to myself, oh, there's something idiosyncratic this time. But if you go on to the next slide, it keeps happening over and over again. I've marked here every instance. So like in green when crypto bottoms before, or Bitcoin bottoms before the US stocks, and then in red when it tops after or beforehand as well. And, it just keeps happening to the point where you hear about people in the macro world using it as a leading indicator for stocks. And interesting. You would think that these bigger markets would be more efficient at pricing this, but somehow there seems to be something there with crypto.
Yeah, and I'm not sure we can identify maybe exactly what the reason for this is. And actually, I think 2020 was probably the most obvious example of it, where it really opened eyes. That's looks like it's earlier on your chart here, but when we came out of COVID in March of 2020, it was a good 6 to 8 weeks that crypto was rising before equities really got the picture. And then obviously there were periods in 2022 as well, and 2021. One of the reasons I think is when you have a 24/7 global market, it's just easier to express your views in that kind of a market than it is for waiting for certain jurisdictional or hours, right? I mean, we all know, you watch Sunday night futures in the equity market, you see how Asia opens if you're here in the US, but that doesn't really help you if you have a change of heart on Saturday morning or if you have a change of heart at 6 p.m. Eastern. It does seem like there's some certainly benefit to just this being a global 24/7 market, but I think it's got to be more than that as well, right? I mean, there are certainly less correlation models going on. In 2022, we had a lot of your traditional kind of correlation guys trading across crypto and equities. You're not seeing that much this year. A lot of those guys who did those types of trades are now out of the market. So I'm not 100% sure why this continues to happen, but it'll be interesting to see going forward. I remember back when I was a high yield bond trader, we every time the high yield bond market started to heat up, we would all just buy equities in our PA because the high yield bonds for a long time were just better. Credit markets were just better at sniffing out reversals than the equity market was. It almost always acted as a leading indicator, and same on the way down. It'll be interesting to see if this dynamic continues, especially as more and more eyeballs and more inflows and things like ETFs, come into play. Moving on here, this is something that I think is pretty important. There's been three really kind of distinct periods that the digital asset market needs to reclaim before, you kind of get back everybody into this market who may have left over the last 18 months. So a little hard to see here on the chart here, but I like what this chart is. So the blue line here is Bitcoin, the orange line is Ethereum, and then you've got the gray line and the yellow line. That is the top 30 equal weighted and the top 100 equal weighted of the crypto market. And the lines going down at the bottom, the one in November of 2022, that was when FTX crashed. The one in May of 2022, that's right before Luna and UST crashed. And if you go back to the very beginning of the chart, that's basically, roughly all-time highs, right? Somewhere around October or November 2021. What's interesting here is, I think these are three psychological levels that we need to reclaim. Pretty much everything has now reclaimed the FTX lows. Certainly, Bitcoin has had a better year than Ethereum, and Bitcoin and Ethereum collectively have had a better year than a lot of the different sectors in this market. Reclaiming the FTX lows was pretty easy. I mean, we almost reclaimed those in the beginning of the year in January, and then have continued here throughout the third and fourth quarter. Reclaiming the Luna highs, that's a little harder. Like I said, Bitcoin's already there and has well surpassed where it was trading before Luna crashed. Ethereum is knocking on the door. It's hard to see there, but I think we were pretty much right around that 2,300 level on ETH right before Luna crashed. The rest of the market's still struggling though, right? I mean, we've had pockets of strength this year, things like sectors like AI, some areas like real world assets, but really for the most part, ex Bitcoin, ex Ethereum, ex Solana, most of the market here is still not come close to where we were in May of 2022 before Luna crashed. And of course, we've got a long way to go before all-time highs. But I think these are going to be the levels that it's certainly we're going to watch. I don't know if others are watching these same ones, but these are ones that we're going to watch as we start to see confidence come back in the market, these sentiment reversals, as well as some of these inflows. I think reclaiming each of these triggers are important, and I don't think it's that unusual for the large caps like Bitcoin and Ethereum to be the first ones to lead, but I would certainly expect other sectors to follow pretty closely. So we've been talking a lot about Bitcoin. Going to the next slide here. Nick, we talk about this internally a lot as well. Bitcoin tends to be the first mover. We saw it, after the sell-off in 2018. Bitcoin was the first mover in 2019 before, everything started moving in 2020 and 21. Same thing felt like it was happening here. 2022, awful. Bitcoin was the first mover for, real idiosyncratic reasons, things like the March regional banking crisis in the US, as well as the BlackRock ETF application, and now, of course, the upcoming halving. But, it's not just it doesn't seem like it's more just a narrative here, right? You're showing fees here of Bitcoin versus Ethereum. What do you attribute to, this strength, and what does this mean if Bitcoin fees start to actually increase here?
Yeah, I mean, so one of the biggest problems with Bitcoin, honestly, in my view at least, has been the economic sustainability question. Like, is there a way for Bitcoin to actually continue on without any fees, and not implement at some point some sort of inflation or have some sort of fee generation in order to continue paying the miners? And that's been a real problem. But this year we've seen the onset of something called ordinals, which is a the ability to write data onto Bitcoin, and people are paying real fees, real money in order to have that ability. What you can do is it's not super efficient. It's not like as good as Ethereum smart contracts, but you can start to do some of that sort of smart contract proming, some NFT creation as well on Bitcoin. And we've seen people willing to pay up real fees for that. So just recently, you've seen fees start to get close to right around where Ethereum is currently, which is putting a big dent in that security problem for Bitcoin. So to me, that's one of the most bullish things that could have happened for Bitcoin, is kind of guaranteeing that last incremental problem that it had, is kind of being fixed here with ordinals.
Yeah, and this is not to say anything negative about Ethereum. I mean, Ethereum has surpassed $10 billion of lifetime revenues or fees, which makes it one of the fastest companies or projects ever to achieve $10 billion in revenue. I mean, faster than Google, faster than Amazon, faster than all kinds of tech companies that have come before it. So, I mean, Ethereum you know, is the benchmark, I could say, in terms of revenues and fee generation and digital assets. And for Bitcoin to be knocking on that door is pretty important. But go to the next slide here. Again, we've been talking about the majors, Bitcoin and Ethereum. I mean, this is clearly, at least over the last 6 to 8 weeks, not just a Bitcoin story anymore, right? I mean, again, we'll get into some of the sectors and certainly some of the layer ones like Solana that are competing. But it seems like the first 7 months of this year, it was all we were talking about. And now you're starting to see the market not only catch up price wise, but also some indicators showing that there's some real substance behind this. So what is this chart showing you here with regard to the breadth of the rest of the market?
Yeah, we're just looking at in the white line here. It's the percent of assets in the top, I think, 100 over the 200-day moving average, and you can just see that spiking up towards the highest levels since late 2021. So, pretty convincingly, this is not a bear market or idiosyncratic rally. This is all the assets rallying. Maybe some like Bitcoin more strongly than others, but definitely a real broad rally at this point.
Absolutely. Okay, so for those who have been patient with us for the first 18 minutes, obviously haven't really talked about Solana yet, but we got to get there on this next slide here. One of the best stories of the year, and I would caveat before we get into it. I mean, definitely Solana was oversold, probably one of the most oversold assets at the end of 2022. For those who have heard us say this before, we were pretty open and loud about calling the bottom in December of 22. We didn't necessarily know what was going to go higher or what the catalysts were that were going to take the market higher, but there were so many obvious bottom signals in 2022. One of which being the window dressing that we saw, things that had a lot of cross ownership into the traditional finance world, things like Coinbase stock, things like the Grayscale Trust, and things like Solana. I mean, Solana was definitely a crossover asset that a lot of long short equity funds, a lot of family offices, a lot of macro funds were starting to buy. Certainly, there was a ton of LPs and venture funds that owned a lot of Solana, and Solana got unnaturally destroyed after the FTX collapse from basically mid-November down to the end of December. So seeing Solana, the price of the Sol token, go higher was not necessarily surprising. I think what was surprising to me, at least, was how much the ecosystem itself is actually starting to boom. And what do you think, Nick? I mean, is it price begets activity, or was it activity begets price, or a little bit of both? What are we really? What's the takeaway here for Solana's strength this year? Now up close to 700% for the year?
Yeah, it's definitely a little bit of both. I mean, certainly you had the price performing really strongly throughout the year. I think this recent strength and this recent rally has been more of the other direction, where you've had fundamentals in terms of really what it's been is people getting excited about tokens on Solana. Previously, it had just been pretty much the sole token, and then some that people really honestly didn't care about too much. And now you're starting to get this potential and some reality of other tokens that people are interested in on the Solana ecosystem. So here we've got from the block the DEX volumes, so decentralized exchange volumes on Solana versus Ethereum. You can see for most of the year that was just hanging around 2%. You get a few spikes up here and there, but just in the last couple of weeks, what you've seen is that really just shoot up, up 7x since then. And going on to the next slide, that's really the story is these airdrops, like I mentioned. So Jupiter was kind of the first one on the scene just a few days earlier than Jito, which ended up airdropping before Jupiter. Jupiter's still not live yet. But what's really cool here is there were only, less than 10,000 users of Solana, like deep users who were still on this and, actively involved in, these are some of the top DeFi projects on Solana. And something like a Jito, for example, only 9,000 people got the airdrop. And when that went live, the price immediately ran up to something like $4 billion fully diluted. So if you just got the lowest Jito airdrop, basically if you staked some SOL, these are liquid staking products. So you just bought some Jito SOL or staked some Solana with a one click, you were probably getting something like a $20,000 airdrop at the peak. With Jupiter, we don't know what the airdrop's going to be yet, but you can see how much people have responded to that in the volumes here up on the top left from Dune in the amount of trading on Jupiter as a result of seeing this impact from expectations about Jito.
Yeah, and shout out to Dune Analytics. If you guys haven't played around with certain data sources, Dune Analytics, a great one to see on-chain data. Our team at Arca pulls a ton of information from there. I think what's interesting to me is, and for those who want a little more background on exactly how the Jito airdrop worked and who got money from it, we wrote on our public blog, which we put out weekly. That's our two Satoshis, which you can find on our website at ar.ca/blog. We wrote a lot about this Jito airdrop, and the reason being is if you go back to 2020, 2021, one of the biggest drivers in our opinion of what became an 18-month long pretty broad-based rally was when Compound, one of the Ethereum lend borrow platforms, airdropped its token Comp to its users, and then quickly followed by Uniswap, which is the largest decentralized spot exchange, airdropping the Uni token. This really opened people's eyes to what I think is the most important part of blockchain-based assets is that if you're an early user or an early adopter of a technology or of a platform, you can be rewarded financially for doing so, right? And it does a lot of things, right? One is it really aligns your stakeholders with your customers. And it really creates customers for life and sticky users and power users and evangelists of your platform. So it had been a while, a couple of years really, since we've seen this sort of success. But think about what happened in the Web 2 world or the technology boom from the late 90s till now. If you were the first Amazon Prime customer, you didn't benefit from Amazon's success. If you were the first Netflix customer, you didn't benefit from Netflix's success. You can go down the list of any technology company or really beyond that, right? If you're a McDonald's customer and you go there every day, you're not really benefiting from its success unless you also go out there and spend your own money to buy the stock. What's happening with these crypto projects is if you're an early user and an early adopter and an evangelist, and you are now being rewarded financially just for testing these applications, just for using them. Some are harder than others. Certainly this takes some patience and some time and some research, but in the case of Jito, it really wasn't that difficult. You had a Solana wallet, maybe it was a Phantom wallet or something else. You as much as one SOL, which at the time was trading at $40. So you could have put $40 into this lend borrow, into the staking contract on Jito, and come away with, as much as $20,000. So that's life-changing money for a lot of people, right? That's not the kind of thing a large fund is going to do, but an individual will. And the more individuals realize that, hey, it's worth my time and energy to learn about these different blockchain networks and these different applications on there, That's pretty powerful. And again, that creates a real sticky user base and evangelist and customer. So I think this is pretty encouraging. I would, certainly not investment recommendation, but certainly from a research and, just curiosity standpoint, I would recommend people start to learn about these and think about what this means testing new technologies.
Yeah, and I think this is really a lot of people are taking you up on that on that idea, because this has really been this cycle's Uniswap moment, at least in my view. Certainly since the Jito airdrop, we've seen all of the other apps on Solana just get swamped with users. Same thing on other protocols like Injective, Avalanche, even some on Ethereum. We just kind of it's like people have reawakened to the idea that yes, you can make money from these, like using these still matters, and so people are back doing that.
Yeah, so we're probably going to lose half our audience here as everyone logs off to go, find the next application to test out here. But we'll move on anyway. So we talked about Bitcoin, we talked about a little Ethereum, we talked about Solana. Where are we going here, right? What is the data telling us in terms of other sectors, other areas of the market, where we're starting to see some real traction? And I'll caveat that by saying, even though we talked about Compound and Uniswap kind of leading the revolution in 2020, it was ultimately what that did for all of DeFi, and then ultimately what that did for stable coins, and then eventually leading to NFTs, right? In my opinion, those were the three most important parts of 2020 and 21 was we had a real DeFi market. Stable coins went from nothing to 100+ billion of assets, and eventually NFTs became a real world use case. Where are we now? What are we seeing in this, renaissance that excites you?
Yeah, so number one thing here is real world assets. This was probably one of the easiest kind of fundamental stories that really paid off in the end. We've got here a chart from rwa.xyz showing the on-chain treasury products, and that was kind of the hottest narrative within real world assets this year. Obviously, a bit hotter before the market really got on fire, but the idea here is bringing treasury products on chain and then being able to expose crypto users to that yield. And so you had things like Maker, things like what Canto was doing with their products as well, bringing these treasury products on chain, and just pretty continuous growth all year in those products. If you go to the next slide, you can see that any sort of token linked to these real world asset projects also performed very well on the year.
And you can see the blue line there being Maple. I can't see what the other ones are here, the green, yellow, and orange. But what I think is interesting here is not just the absolute performance of those tied to real world assets, but also the decline in the last 3 weeks here. And I think that's really interesting as well, because at the end of the day, what we're talking about here is a yield product, right? These are, 5% yields were really exciting after, basically 2 decades or a decade of no yield at all in rates. And it was certainly interesting when there wasn't a whole lot going on in the digital asset market or the equity market. But as what we're starting to see now is as other sectors are heating up, as other usages are heating up, like we mentioned, Solana and Air Drops, and obviously what's now happening in the equity market with a nice, 12 or 13% rally off the lows. All of a sudden, yield products a little less interesting than what you can do, right? If you're just thinking about it from a cost of capital standpoint or from an opportunity cost standpoint, made a lot of sense to hold a yield asset or to try to get 4 or 5% when there's nothing else going on. Now you're starting to see a rotation. So where are we seeing that rotation? If it's coming out of this real world asset protocols, where is it going? What else are we seeing?
Yeah, so getting onto slide 16 here, crypto and AI has really been the hottest narrative, at least within the space for this year. One of the projects we're most excited about is called BitTensor. So it's kind of a platform that it's similar to Bitcoin, at least that it uses Bitcoin-like incentives to get miners to, instead of providing security, they basically provide artificial intelligence models. So one example here we're looking at is a case where they're trying to get miners to predict the future price of Bitcoin. And you can see in that orange line, it's got the amount that they were wrong on the future price guess on the y-axis there, and you can see that heading downwards over time, to the point where now they're off by way less than random when they're making their predictions right now. So just kind of showing that with these crypto incentives, you can actually get some outcomes that are pretty cool. And that's just only one of the things they're building. They've got 32 different networks over there, all trying to build different applications on BitTensor.
And I would say for those who maybe are just sort of learning about AI and crypto or both, you know, one thing that has been always true about data is garbage in, garbage out, right? So you could have the best platform in the world, but if it's getting inputs from the wrong places, your outputs are going to be bad as well. And I think that's one of the takeaways for me, at least, with this idea of decentralized AI, something like BitTensor. There's others as well, but certainly BitTensor is one of the ones we like the best. Is the idea that, you know, who is training these AI models, right? I mean, whether it's OpenAI, ChatGPT, you know, ultimately who trains the models is going to have a huge impact on what the output of those models are. So when you get to a more decentralized fashion where there's real penalties and rewards for having better data and better inputs, that's going to lead to better outputs. And for those who want to get a little deeper on BitTensor, again, you know, on our website, that's our two Satoshis on our blog. We did do a pretty deep dive on BitTensor there as well.
Yeah, yeah. And you know, that's definitely one of our favorites, but not the only one. If you go here to slide 17, some of the other platforms, you know, maybe not explicitly AI platforms, but what you've got here is on the top left, Render Network, and then on the bottom right, from CloudMost, this is for Akash Network. What these are networks that provide compute services for via GPUs, so the more powerful kind of computers. And you can just see on both the platforms, Render just seeing increasing demand over time, and then Akash is really spiking up recently. Akash just added, they previously were doing more cloud computing style, so similar to what you would get with like a Google Cloud or something. And recently they've really pivoted the business more towards these GPUs, which are what AI researchers use to kind of train and query machine learning models. So really more focusing on these AI use cases. And the markets have really recognized that as well and rewarded these tokens.
Keep going, you're rolling. So what else can we learn, or what's the other takeaways here from AI?
Yeah. I mean, this is one I came across I thought was pretty cool. This is from Grass Protocol. This is a kind of newer one. The idea here is using your IP address or giving access to your IP address to these whitelisted AI research teams, and they can use that to kind of web scrape data. So these models are reliant on huge amounts of data in order to train them up and get them to be, you know, as quality as something like a ChatGPT is today. And so these other sorts of AI research teams, you know, maybe universities or something that don't have the huge amount of access that a public company like, or not public, but a big company like OpenAI does, need to get these data from somewhere. This is a way where you can support these other AI research teams, and then Grass is giving you points on as an incentive for providing that service to them. And you know, the expectation is that eventually comes with an airdrop here. So you know, I'm wondering, we've seen Solana start to drop these airdrops. Maybe you know, this AI narrative starts to broaden out, and we start to get a deeper integration level as well with what crypto users can provide to that industry here. So just something I thought was pretty cool as well. On slide 19 here, getting away from AI a little bit, this is a platform called Avo that I thought was also pretty cool. So Avo is a futures or a derivatives exchange, but what they've been doing is listing these tokens prior to the actual implementation of the airdrop. So they did Jupiter, or they've done Jupiter before their airdrop, and they did Jito before their airdrop as well. And so what that allows you to do, and something that I hadn't seen in crypto before, is if you're the future airdrop recipient, you know you're going to get one, you can hedge your position out. You know, you can choose at essentially the price point. You say, all right, well, that's, I think, is the fair market price, and I'm just going to hedge that future airdrop. Or if you're a speculator, you know, you can go and take a guess on what the future price of the token is and speculate on that. And there's no, you know, delivery of the physical tokens here, so it's all with this perpetual futures product, which, as far as I understand, is only available in this digital asset ecosystem.
Yeah, I mean, not an entirely new concept. I mean, you know, again, going to the credit markets, you know, there's when issued bonds, you know, something that you know is coming. You know, sometimes 3, 4, 5 days before it comes, the market makers will start making markets on the when issued, and you can trade it as an OTC, you know, and basically delay settle until the bond is actually issued. Occasionally, you see that in the equity market as well. But you're right. I mean, this is something that shout out to the creative minds and developers and exchanges of in the digital asset market is, we are basically rebuilding a financial system. It's not perfect. There's certainly some flaws. There's some things that are better than the traditional world, some things that are worse. But this idea of being able to anticipate and speculate and ultimately hedge prior to even physically owning those tokens, we'll see where this goes, but certainly something that I think will probably get traction if we do start to see more and more of these airdrops and more of these, fairly telegraphed launches.
Yeah, definitely. And we love to see, more innovation here on the DeFi front, which is something that hasn't been quite as hot of recently, but hopefully going forward we get some more of that. Last slide here on number 20. One of the other big kind of more individual narratives that has picked up recently is around a decentralized exchange called Thorchain. And I say here, decentralized exchanges might prevent the next FTX. The cool thing about Thorchain is it's a cross-chain decentralized exchange. So, think of something like a Uniswap that only exists on Ethereum. Yes, you can trade every, Ether and all of the different ERC20 tokens and stable coins and, whatever you need on that side. But if you want to access Bitcoin, you have to go through a centralized exchange at this point. And Thorchain is kind of the first thing that we've seen that really makes that not be the case necessarily. So Thorchain allows you to trustlessly swap these assets across chains. So whether that be Bitcoin, BNB chain, Ethereum, Dogecoin, whatever, you can do that. And what's really cool here is, if you've been around the industry, you've seen bridge hacks over and over again, just kind of plague a lot of protocols within this space. This is an exchange, not a bridge. So you're not interacting with any smart contracts on these chains. It's literally just people moving assets from wallet to wallet on each of these different chains. And that's what allows, a much more, hopefully, at least if it's implemented right, a much more secure experience than what these bridges have done in the past. So maybe this is the kind of solution for something like an FTX if you have this trustless exchange, to TBD, but really has been picking up recently, and you've seen a lot more volume there on Thorchain.
Yep, unlike the traditional finance world where we just continue to paper over all the problems and watch the large banks pay fines and cater to the government, and then we just rinse and repeat and do it all over again. Be nice if after a situation like FTX last year, if we actually come up with a better and different solution rather than just rolling it back the way we've done it for the last 50 years or so. Well, listen, guys, appreciate you guys taking the time to hear our thoughts on the markets here. As we mentioned, this is a new series. We're going to be doing it monthly. Maybe the cadence changes over time depending on how active the market gets this year. But certainly monthly, we're going to start with, drop us a note. You can go to our website, ar.ca. You can certainly find us on Twitter. I'm at jdorman81. Nick is at Nick_Hotz. Let us know what you like, what you don't like, what you want to see. Obviously, we're not going to get to everything every month. But certainly more exciting things happening in the market right now, to come out of the ashes of 2022 and to be able to not just see prices go higher, but to see this activity increase, to see new users of digital assets and blockchain assets starting to get rewarded for their efforts. I think there's going to be a lot of interesting things to talk about this year, and I appreciate your time. So Nick, as always, thanks for joining. Sumana Matra, thanks for putting it together for us, and we will see you again next month.